Hello everybody, few big updates are coming from news and take a look at this data coming out of China Intelligent Driving Competition at the Taizhou station. In a field pack with the world's most advanced EV tech, the new ES6 just finished as the biggest dark horse, skyrocketing 9 places to land in the top 3 with a near perfect score of 99.38 points in Taizhou station and a total point tally of 535.32. NIO is standing shoulder to shoulder with titans like Avita and Xpeng. This isn't about bragging rights. It's about the intelligent driving system, the brain of the car, which is where the future of automotive value is being decided. But why does this matter for the stock? Two words: momentum and scale. NIO just reported its November delivery numbers, and they are staggering. We are talking about 36,275 vehicles delivered, a massive 76.3% year-over-year jump. Cumulative deliveries are now knocking on the doors of 1 million units. For skeptics, the argument was always that NIO was too expensive or focused too much on expansion of battery swaps. But the market is proving that their multi-brand strategy with Onvo and the Firefly ramping up is hitting the sweet spot. Even Simply Wall Street noted that NIO could be considered undervalued, with some models suggesting an intrinsic value near $7. While the stock has seen its share of volatility, the underlying tech is no longer in question. NIO is no longer just a premium lifestyle brand. It's a dominant tech competitor. With delivery growth exploding and their intelligent driving system beating out the competition, the fundamentals are catching up to the vision. Apart from this, another good news which is coming from Neozen is this. We just heard from CEO Lipin and the message is clear. NIO is going for the fourth quarter profit target. In a world of EV price war and margin comparison, NIO is standing in the ground and claiming that the 70-day countdown to profitability is on. Is this just CEO optimism or are the numbers finally backing it up? Let's break down why this time actually feels different. If you look at the third quarter results just released, you will see the foundation for this fourth quarter pivot. Vehicle margin didn't just tick up, they climbed to 14.7%, up from 10.3% in the previous quarter. This is a massive jump. Even better, the overall gross margin reached its highest level in 3 years at 13.9%. Why? Because NIO stopped just being luxury car company and started acting like a disciplined manufacturer. They squeezed material cost, optimized their supply chain, and delivered 87,071 units in Q3 alone, a 40% year-over-year jump. We are seeing a record-breaking delivery trajectory. Libin noted that the spending was front-locked in third quarter, meaning there are no new massive marketing campaign or NIO Day expenses dragging down the Q4 balance sheet. All the heavy lifting is done. Now it is just about execution. NIO is attacking every market segment, the main brand holding the high ground. The all-new ES8 is seeing strong backlog orders, keeping that premium margin high. Then on with the family brand, the L90 is already becoming a volume driver. Then comes the Firefly, the small high-end line designed to capture the urban European and Chinese market. This house of brand strategy allow NIO to keep their flagship brand elite while scaling volume through Onvo. They are reaching that critical economic of scale point where the fixed cost of their 3,000 plus battery swap stations start becoming an asset rather than a liability. In Q3, for the first time in a long time, operating cash flow turned positive. That is a holy grail for growth. When a company proves it can generate more cash from operations than it spends, the bankruptcy bear have to go back into the hibernation. Analysts at JP Morgan are already calling this the profitability inflection point. While some are skeptical, the trend line for revenue and earning per share are pointing one way, up. So what's the bottom line here? Libin said it best. The previous downturn was the best training period. NIO has emerged from the cliff zone leaner, more focused and with a product mix that finally balances luxury with volume. With targeted 125,000 deliveries for the fourth quarter and cash reserve of over 36 billion RMB, NIO isn't just surviving, it is preparing to thrive. So get ready for it. With that said, thank you so much for being here. See you in next one.